Hey everyone, on today's episode of DEETOUR, we're going to talk to my friend Anthony, who is an agent at New York Life Insurance. And the reason why I wanted to bring him on is I'm actually looking for life insurance right now. And I found the process to be quite challenging and really confusing of what I'm signing up for, why the prices have varied on so many different occasions. And he was randomly meeting up at the office, so I grabbed him and said, hey, can I just ask you a bunch of questions about finding life insurance? So I think it's an interesting conversation that, you should listen to, because even if you think you're not ready for life insurance, you might actually be. If you have more questions about it, hit up Anthony. He shares his email and his phone number and his Instagram, so definitely use that as a resource. But it's an interesting learning experience. It kind of continues our exploration of financial literacy, which most of us don't really have. So listen in. Let me know. It's a little longer than usual, but I think it's worth the listen. All right, so today we have a friend of mine, Anthony, here. I think I've known him, how long have I known him? Probably 17, probably when I started the business, probably 15, 16 years ago. I knew him from his previous life, which was in nightlife.
Yes, sir.
And now you are a New York Life agent.
Mm-hmm.
Insurance, is that how we explain it? Or
yeah, wealth management.
Okay.
Wealth management, but the company, they're really known for life insurance.
Got it. So this is perfect. We just scheduled the time to just talk, and I wanted to pick your brain, and I figured I might as well do it on the pod because I think it's an important question to ask.
Okay.
Life insurance. So I recently obviously had a child, and so my wife's like, do you have life insurance? And I was like, no. And, you don't even think about those things until someone else's life is dependent on your well-being. And, obviously I have investments. I have, my business. I've done fine. But life insurance is something that I just never got and never really saw the need for. And so now I'm looking for life insurance. Okay. And here's where I'm struggling. So I get served an ad, and it says, if you run a 9-minute mile and are a marathon runner, your life insurance is $59 a month.
Right.
I'm like, okay, that seems cheap. I'll get some life insurance. And then randomly one day, my wife and I were just playing on our phones. She got served an ad, put all my age, put in, I forgot what the dollar amount was for the benefit, and it was like $300 a month. Mm-hmm. And I'm like, damn, this seems scammy as fuck. Like, one guy's charging me $60, another one's charging me $300. What the fuck is going on? What is life insurance?
Well, life insurance pretty much is, it's an insurance to just cover your life, pretty much. Everybody insures everything. You insure your car, you insure your phone. Life insurance could be used to insure your money that you work for, to make sure it stays with you. The difference in those prices that you're talking about, with it being so cheap, that typically will be a term.
Okay.
A term policy is basically something you use for debt. Say for instance, you have a student loan, you have a house or something like that, and you want that to be paid off
in the event
that something happens to you. That term policy is to cover that. Case in point, for myself, I have a house, so I have about $350 left on the house. Mm-hmm. So and it's like 20 years left or whatever, 18 by now. But when I did take out my policy for the house, I got it for 20 years, a term, for that $350. So in case something happened to me before that $350 gets paid off, that policy alone takes care of that.
So term insurance is for a period of time. Mm-hmm. So what are the options of term? Is there like a 20-year term?
20-year, 10, 15.
Okay, so let's take 20-year term insurance. What am I paying for?
What are you paying for? You're paying for pretty much just the benefit, like $350, and you're paying for, I would say, the first 1 or 2 years you're paying for cost of insurance.
Got it.
Which is pretty much, for something like that, it'd be probably like an extra $8 a month or something like that. But just the cost of the insurance.
So you pretty much pretty much everyone should get term insurance.
Absolutely.
At least to cover the basics.
At least, exactly. Yes.
Got it.
And the other difference in price, which you saw probably $300 a month or something like
Yeah.
that, that's more than likely a permanent policy.
Okay.
See, the difference with term and permanent policies, like a whole life. Term is like renting a house.
Okay.
Permanent policy is like owning a house, because with a permanent policy, you get it, and you can actually pull money out of that policy.
Okay.
You build up equity in it, just like you would with a home.
So on a term policy, I have to pay a monthly payment for 20 years if I got a 20-year policy?
Right. And that monthly payment remains constant for those 20 years.
Okay. After the 20 years is up, does the policy still in place, or is it gone?
It's up to you. You can either cancel it at that time. See, the thing is with term, because you get so much coverage for cheap. Now, if you decide to keep it past that 20-year period, or whatever period you have it set for, it becomes increasingly expensive.
Got it. So the term policy only covers you for the life of that policy.
Right.
So if a 20-year term I pay and I die on the 21st year, that shit's gone.
Well, if you're not paying on it on the 21st year, yeah, it's gone.
Okay.
Yeah.
So
unless you want to pay, say like something like you're paying like $50 a month on that 21st year, that $50 a month could jump up to about $2,000 a month.
Wow.
Yeah.
And you can't just get a new one.
You can, but now 20 years later,
you're older.
Yeah. Your age, your health situation might be different.
Yeah.
So now it might be even more costly.
Okay, so what do you recommend on term insurance? Like, what time period should people get? I mean, so the basic idea is to cover whatever debt that you currently may owe, so that in the event that you pass, your loved ones don't have to deal with it.
Correct.
And so, what's like the recommended time period? So I'm 38. What should I get?
It depends on your needs and your debt. If you have major debt, get term to cover that debt.
Okay.
You know. With New York Life, you could get that term, and then you could convert it to a permanent policy.
Got it.
It's best to do it within 10 years. So say like you have something like $1 million in coverage. On the 8th year, you decide, you get a better job or whatever the case is, and you want to convert some of that, you could convert all or part of that.
Got it. And now, what were you saying?
So let's say you have $1 million. So let's say, 8 year, I want to convert 500 into a permanent policy. So you'll have 500 into a permanent policy, start growing equity in that whole life or that cash value policy, but then you still have 12 years left on a term. So now your term now is like 500,000 in coverage.
So you still have that.
Right.
And what is a permanent policy? So what's the exact difference?
The exact difference is a permanent policy, you could start off with, let's say, 500,000. Over the years, it will continue to grow.
So $500,000 of coverage.
Coverage, right.
And so the way that works is both life insurance, term and permanent, I do a health exam.
Right. Mm-hmm.
And then based on my health, they determine how much I pay a month.
Exactly.
And so
your age and your health.
Age and your health.
Yeah, because if you're closer to your life expectancy, of course, more than likely, you don't have that much to.
What's the recommended age you should get life insurance by?
As soon as possible.
Okay.
I have my daughter. She's 5. I got it for her when she was 3.
Wow.
Yeah. Because with kids, they don't do a medical exam for kids.
Got it.
Not until they're 18.
Got it.
My daughter, she has asthma. If she was 18 and getting coverage right now, she probably wouldn't get it.
Wow.
Because that asthma is real. It's a real issue for people, and it can lead to other problems.
Fuck, I have asthma. God damn it.
But if you're older though, it doesn't really work for like adults like that, because asthma with adults, it doesn't really affect kids as it does.
Yeah.
So she's older, she's young, she has asthma, and she has a peanut allergy.
Got it.
So they don't do any medical on that, so she gets covered right away.
And I'm sure smokers are screwed. If you smoke, your life insurance should be, because that's insane.
You're gonna get approved. You're just gonna pay a higher premium.
Yeah.
Because
what about Juul?
Juul.
The vape pens. Have they got onto that yet?
Yeah, they caught onto that, but not as much as with tobacco products.
Yeah.
But your premium more than likely will be a little higher.
All
you gotta do if you're getting ready to take a test is just, I say within a couple weeks, 2 to 3 weeks, don't do it.
Yeah.
Take a lot of water, and you pass the medical exam.
Got it. And so let's go back to your life insurance policy, the difference between term. So explain to me, like, let's say I got a $500,000 policy today. I get my medical exam. Why is that policy more expensive?
The whole life policy?
Yeah.
Because of the benefits that comes in with it.
So what are the benefits?
Like to start off, $500,000, that policy would now remain at 500,000. That coverage would continue to grow throughout the years.
Why does it grow
Because
automatically?
it's getting paid with interest.
Got it.
And even though dividends aren't guaranteed, New York Life has been paying dividends for 163 consecutive years.
Got it.
So then you could get dividends added on to that as well on top of the interest that's getting
So
paid
when
onto
do you
the
get
policy
those dividends?
at the end of the year.
Okay. So like if I have a $500,000 policy, and like what kind of percentage is a dividend?
Our dividend, we just announced a new dividend. I'll tell you, last year though, it was about 6.2%.
Got it.
6.2.
So you get that money back, or does it get credit towards your policy?
It can get credit to your policy. It depends on you, on if you want to credit it to yourself, you want it in cash, or you want to just add it into the policy.
Got it.
But with the whole life too, the benefits in it, you have that. It works just like a house. If you want to pull equity out of it, you can pull equity out of it tax free. Uncle Sam does not know what you're putting this money out for, and they can't see it.
And so how do you and so if I signed up for a $500,000 policy today, and how much do you think I would be paying? That'd be a lot more than term.
Yeah.
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 So let's just give me an arbitrary number. I'm not going to hold it to you. $300 a month, something like that?
How old are you?
38.
Let's say you're doing it for about, we also have this patent that you could pay for that for a certain period of time. So let's say you want to do it, say you want to retire in 20 years.
Okay.
At 58.
Okay.
You could pay for that policy up until age 58. So that in 20 years, probably like 700.
Got it. 700,000.
$700 a month.
$700 a month
For
you pay.
500,000.
And then after those 20 years are up, what happens to that money?
That money is still there. The policy will continue to grow even though you're not contributing to the policy.
And the policy, how does the policy appreciate in value? Is it just based on the dividend?
Dividends and the interest that's being paid on it. And not to mention your contribution that you're paying into it every month.
So that goes on top of the principle of the value of the policy.
Because pretty much it's just like a savings account. You're putting money into the savings account every month. But on top of that, it has a death benefit.
Got it.
So that's why that money you're putting into it, you could also you be able to get it back tax free.
Got it. So like, let's say I have this $500,000 policy. I've been using it for 3 years. How much money can I pull out of it?
Not gonna pull out that much.
Yeah.
Because
they
like
just
I said, the first 2 to 3 years you're paying, some of that money that you're putting into pays for the cost of the insurance. It's just like buying a house. You buy a house in like 2 years, pretty much if you sell it after the 2 years, you're not gonna get that much money back on it.
Got it.
Because you need time to build up that equity and let it grow.
And then so the equity is built through the interest, through the dividend,
right?
And then that's the amount of money you eventually can pull out.
Right. After, I would say around 8-9 years, you could really start to see the cash value portion start growing.
And then
after a period of time, it just grows significantly. Some people, they're like, okay, what if in like 15 years I can't pay the premium? Well, based on the dividends that get added to your policy, you could call up your agent at one point, like, look, I can't pay it for the next couple of years. What are my options? You could take, at that time, your dividends that's getting paid to the policy might just cover that premium and you could take the dividend and pay for your premium that way.
And then are there any tax benefits for the term or the whole life policy? Like the dollar amount, are those deductible, or how does it work?
With the CPA, they probably can figure that out for you. A lot of business owners, they might have some tax advantages, but they'll have to deal with their CPA in regards to that and see how they can maneuver that and use the premium and deduct that. Yeah, absolutely.
Okay.
Absolutely.
And then are there any other kind of interesting, like how do people get comfortable that they're not getting ripped off? Is there like a standardized number, or is just like if I asked you whole life policy, term insurance policy, and I went to 10 different people, am I getting 10 different numbers?
Absolutely. Absolutely. Every company will base it.
How badly is the worst case you're getting ripped off? Like, is it bad?
The worst case, I would say with a company, what a lot of people don't like about life insurance is that, oh, you guys are not going to pay or whatever the case is. Let me tell you something. All insurance companies, they will pay. It depends on when they're going to pay.
Yeah.
Like,
they're going to fight
tooth and nail not to pay.
Yeah.
But they will have to pay.
Yeah.
The Department of Insurance will demand them to pay. But it's just like you go to court and you win a settlement and a judgment.
Sometimes it takes 10 years.
Exactly. Because
Yeah.
that person might not just pay right away, but you're going to get it.
Yeah.
It's not going to be right away. With us, it's no problem.
Yeah.
There's a guy in the office. He signed a guy up 10 million. I think it was like 5 policies. Altogether, it was like 10 million in coverage. 2.5 years later, the guy dies from cancer.
Jeez.
And everybody, any other company would be like, whoa, he knew he had cancer. That's why he put out this much money. We cut the check in 3 days. 3 days. No questions asked. It don't take that. We have $25 billion in our surplus total. To pay someone their benefit, it's nothing to us.
Yeah.
That's
your business unit. You're supposed to do it.
The worst thing that could happen to us is somebody bad talking the company.
Yeah.
That would hurt us more than not paying anybody their benefit.
And what about like if you are looking for insurance, because I'm sure there's a lot of people listening that are thinking about it. How do you, like, obviously you're with a big company and obviously you have competitors.
Right.
Is it just to be safest to go with the biggest companies? Is that the safe play?
Well, you want to look for credibility.
Yeah.
It's like pretty much the same reason why you would choose to bank with a certain bank.
Yeah.
And you have to take those factors into consideration.
Yeah. How do you do your homework and get comfortable with going with a certain person or a certain company?
Well, you could look at the years the company has been around. Their for credit system ratings, I can't even think right now. That they rate insurance companies.
Mm-hmm.
You can look at them and look at the ratings that the companies have.
Yeah.
Fitch, S&Ps,
Yeah.
Poor's. Look at their ratings that they give these insurance companies. If you have an insurance company talk about, oh yeah, we'll give you a policy, you don't have to do the medical right now. You should run.
Okay, so that's red flag number
That's
one.
red flag.
Yeah.
That's red flag. You have a company talking about, oh, you're in your 40s, you want $1 million in coverage, and they're going to charge you $20 a month. Run. There's no way possible.
Yeah. So do you recommend people shopping around just so that they get comfortable with the idea?
Absolutely. Yeah. So you can know what's out there, whatever the case is, but know that if you have a term policy, they should give you the option to convert that term after a certain period of time.
Okay.
A lot of companies, too, they'll tell you, like, oh, get a term, and then what you put in, we'll invest the difference, and we give you 12% of your return. No one's getting 12% return. If that was the case, Warren Buffett and all them will be in that business as well.
Yeah.
The market doesn't even give you 12% return.
Yeah.
If that happens, that means they have to give you 12% return every single year.
Yeah.
The market cannot guarantee you that high of a return every year.
That sounds shady.
Exactly.
Yeah.
With all the ups and downs or whatever the case is, so don't do that.
And are you comfortable with just people reaching out and asking you questions?
Absolutely.
Okay.
That's all it is. It's about questions and providing knowledge and just sharing the information. That way, people are more equipped to make the best decision that's fit for them and their family. But overall, I will always say the best time to get life insurance is when you're young, because it's cheaper when you're young.
Mm-hmm.
You get a ton of coverage when you're young. Like I said, we have the patent where you could pay for it like a permanent whole life policy up to a certain point in time, like as you will want it. Say someone's 30, they want to do it for 35 years because they plan on retiring at 65. So pay it up for that year, and then you can take that same money once you're done and you're retired and supplement your income for retirement. That's all it is.
Got it.
And then too, when you're young, a lot of people a lot of people ask me too, it's like, why would I want to get life insurance for a baby? They're just a baby. Well, overall, you saving them a lot down the future, because you get them at 1 year old, newborn, whatever the case is, and you're getting this policy for them. By the time they're 18, you have enough cash value in there that you could pull out, pay for their college.
Oh, okay.
Or you could just leave it, let it keep growing in there.
And then that's something for them.
Yeah, 30 years old. Oh, I want to buy a house. I want to buy a car. You could pull that money and you could, Nowadays, I've come across a couple of people, and they haven't, college isn't for everyone. Someone, I know they came to their parents like, oh, I have this idea for this business. I'm quite sure you come across, how do I get it started, whatever. Part of it is the capital.
Mm-hmm.
They'll come to their parents. Oh, could I borrow da-da-da-da-da?
Yeah.
Can't have my money, but when you was young, I put this policy out for you. You could pull money out from there.
And that's your investment.
And that's what I've come across a couple of people that have done that, and they've started businesses because they didn't know their parents started this policy for them back in the day. It's grown to a certain extent. They could pull that money out tax-free. They don't even have to pay it back or anything like that.
How much is a policy for a child?
Um, it depends on the amount that you of coverage that you want
Yeah.
tied into that back end.
So if
of
it was like $500,000,
that's nothing on a whole life type basis. It's probably like 200, 300,
got it.
$200 at the most.
And
if
then
anything
that
like
will obviously over a 20, 30
It'll
year
grow.
period. Yeah.
It'll grow extensively. And everybody's like, why would I get that over Gerber? That Gerber thing is
What is Gerber? I don't even know what that is.
Gerber Life. They have the baby food thing.
Yeah.
They have like life insurance policies for kids, but the thing is, it doesn't grow. And after a period of time, it's such a big fraud, because if you go around right now and the people that say they have the Gerber Life thing, you ask them if they could actually pull that money out or they actually benefit from that policy. No one could ever tell you that I've come across that they've gotten money from that Gerber policy.
Got it.
Oh, it's cheap but it's Gerber. They're about babies. Yeah, but that's
So they're fine in terms of in case of some catastrophic thing happens, that policy will pay out, but it's not a deal for growing your money.
No, not necessarily. No, not really. No, because you want that. See, the tax code is 7702. That tax code prevents the IRS from taxing that money because they consider it as a benefit.
Got it.
So that money would not get taxed. I saw a lot of rich, wealthy people, they use that to their advantage. Rest in peace, John McCain. When he was running for president, he took money out of his life insurance policy to pay for his whole campaign.
Wow.
It was like $4 million or something like that, 4 point something
To get it going, yeah.
Yeah, and he pulled that money out, and that's what he used to pay for his campaign.
Wow, and he had accrued that much money.
It's pretty much tax-free money.
And so he got all that money tax-free.
Yeah, tax-free. There's nothing.
Damn.
Like, I'm kind of working with a client right now, and she wants to use life insurance as an investment tool, so she wants to do a one-time payment. You could do a one-time payment. You could either pay monthly, semi-annually, annually, and in her case, she wants to do a one-time payment. You do a one-time payment, we take it, put it into a separate account, and pull the premium from that account, and pay the policy every 5 years. We do that every 5 years. While it's sitting in that premium account, the money is also growing. I think our interest right now is 4%. So that money is going to also grow while it's in this premium account. So at year 6, it will be liquid, which means that you could pull the money out and use it for what you want. So that $1 million that she put in at year 6, she could use that money, get that $1 million back if she chooses.
Yeah.
But she plans on keeping it in there. At 30 years, because she's about 36, at 30 years, she wants to hold it in there actually till she's 70.
Okay.
So she understands little financial things, but she wants to hold it in there till she's 70. By that time, she will have about 18 million tax-free.
Oh, my God.
And that's just based off of 1 million.
That's crazy.
That money would never depreciate. Whatever you put into life insurance, that money would never depreciate.
Yeah.
If you look at it, what happened in 2008, all the people that got bailed out, they got bailed out by insurance companies, life insurance companies. And
since you guys are liquid.
Exactly.
Yeah.
We're liquid, and whatever you put in there, the money isn't invested into the market. It doesn't run on it. It runs by the interest rate. All interest keeps doing is going up.
Yeah.
Since 2008, a lot of banks have put money into life insurance policies by the billions. So
to
that
protect him.
Exactly.
Yeah.
Exactly.
Got it. So what's the best way to get a hold of you?
My phone number, 323-620-8347.
They can just text you?
Yeah, they could text me or email me at AEV as in Victor, ELY as in Yankee, and as in Nancy at NewYorkLife.com.
Okay.
Evelyn at NewYorkLife.com.
And what about on the gram? Are you private or are you public?
No, I'm public.
Okay.
There's Anthony NYL. I think that's what it is. Anthony NYL.
I think it's underscore.
Underscore LYL.
Yeah, so Anthony
underscore
N-
NYL. Yeah,
Okay.
New York Life. Yeah.
Okay.
Anthony underscore NYL. Yep.
Cool, man. Well, thank you.
No problem.
I'm sure we'll have more questions, and maybe I'll get some life insurance.
Yeah. If there's more questions, I'll come back and answer some more questions.
Okay, yeah, 'cause
clear
maybe-
up that stigma with life insurance.
Yeah, and one of the things I want to do is like document the entire experience, because I think a lot of people are just like, they want to get comfortable with it.
Right.
Like even with me, like I just feel like, no offense to your profession, but I feel like a lot of people feel scammy.
Yeah, absolutely. Because there are companies out there that scam people. And, it's a lot of new companies that come up. Not trying to say that they try to hustle and get into the business, but sometimes they go about it the wrong way, But overall, it's the best thing to have to protect your family, because bad enough you're gonna deal with a loss emotionally, but then you have to turn around too and tie up their loose ends and their financials. That's a whole nother headache that you don't want to deal with.
Yeah.
It's like come funeral time, everybody's coming to the wake with a fruit cake or something like that. I'm coming with a check.
Yeah.
It's not gonna bring them back, but it's gonna actually continue that lifestyle that you at least were comfortable living.
Yeah.
There's a lot of people once a loved one passes, usually it's the breadwinner, and now they
Yeah.
struggle to pick up.
People
the
bringing
pieces.
fruitcake?
Yeah, they
That's
bring
disgusting.
whatever, the fruit cake, fruit salad, whatever. I don't know. But I'm not bringing food. I'm bringing a check that you could pay off a lot of debt with and all that, and keep your lifestyle going. Because you don't want to set back and we had
Especially
a
if your
house and now
family,
we
yeah.
got to go out and go into an apartment,
Yeah.
or the house goes in a probate or something like that. No, that money will take care of all of that.
Okay.
You know what I mean?
Great. Well, thank you very much.
No doubt.